we could see that inflation was coming down, but this week's news is good because it's a sign that we've had more than we expected, and that's very good. But of course, the job's not done yet. We can't be complacent about this. Our job is to get inflation back down to the 2% target and to sustain it there. So the job isn't done yet, and we will, of course, keep on doing the job.
But many people see this now as a peak. We've seen other central banks also sort of pause their rate rise cycle. Is that the right way to look at this? The next move will be down.
No, I'm not predicting at all what that is. I can tell you that we have not had any discussion on the Monetary Policy Committee about reducing rates because that would be very, very premature. Our job is to get inflation down. As I see it, we've got a big job to do. We've got quite a long way to go yet. It's encouraging, but I'm afraid we can't be complacent. And of course, we will watch the evidence very carefully, as we always do.
Is your sense that the medicine is now working?
Yes, I think the effects of what we have done over the last, not far off 2 years now, actually, are coming through. We've used the word restrictive. What I mean by that is we can see policy having effects. We can see it, in a sense, having the effects we hoped it would. And that, of course, is reducing the inflationary pressure in the economy.
Are you worried about maybe what's happening in the oil market with fuel prices? The IMF have done a report saying, beware premature celebration. We've looked at the 1970s oil shock. That's what happened then.
Well, there's no premature celebration because we've got a long way to go. Yes, we are watching the oil market very carefully. I think that's important. We have to do that sort of thing. We also have to, though, be very careful in the judgments we reach on it as to how permanent it's going to be, what the effects on the economy are going to be from it. So we watch it very carefully.
And we are a year on now from that mini budget, that shock to the system, on which you were central. You may have heard the former Prime Minister's comments earlier this week saying that the Bank of England had been too powerful in that episode. What's your reflection a year on, and what's your reflection on those comments from Liz Truss?
My reflections have changed. I've always been very careful that it's not the Bank of England's job to be judgmental. I would not be judgmental about Liz Truss. I'm very clear on that. She was duly chosen as Prime Minister, and we all wanted her to do the job. We had to come in and tackle a particular problem, and the particular problem was a financial stability problem. It was to do with the pension funds. We came in and we did it, and I was always very clear our action was going to be temporary and targeted. It would go on for no longer and no more than it had to be, and then we pulled out because we knew that the particular issue that it was our job to tackle had been tackled. And I have no desire ever to get in the way of what governments do, because that would be wrong.
Do you think we still have a bit of a shadow from that mini-budget episode?
I think actually that, obviously initially there was quite a big effect on markets, but I think that has actually dissipated really. I think we're now back to much more normal conditions now.